I kind of get excited about, talk about the future of VC. I personally am looking for things, generally, which no one else wants to fund, right? And I think that VC in general will be pushed away from the software stuff that it's grown up on or been defined by the last 20 years.
Welcome, everybody. I'm Mark Peter Davis, managing partner of Interplay. On this podcast, I interview innovators about their strategies, industries, and decisions. Today, I'm very excited. We have Sam Lessin on the show. Sam is the general partner at Slow Ventures and the co-founder of Fin, but he is much, much more than that. Sam is, in the truest sense, a Silicon Valley insider. He's a part of the Harvard tech mafia, sold a company to Facebook. He's buddies with Zuckerberg and all of the other names you know through the Facebook team. He is, beyond all of that, extremely bright, an extremely deep thinker, an abstract thinker, and I have always just been a big fan of listening to him and learning from him. We cover a bunch of stuff today, including how he sees the VC model changing, and he has some strong opinions about this, which are great. The future of the US and Chinese models of government, the evolution of the media industry and its business models, and a whole lot more. I hope you enjoy. This episode is brought to you by Bowery Legal. Bowery Legal provides a complete range of legal services to high-growth companies. They do everything from formation, employment, partnership agreements, stock grants, corporate matters, and venture capital and debt financings. If you're interested in learning more, visit bowerylegal.com. Welcome, Sam. Thanks for being here today.
Thanks for having me. Great to be here.
All right. Let's start off. I always think it's helpful to give people a little background on your primary focus these days before we kind of dive into other stuff. Would you give a little color on Slow Ventures?
Sure. So Slow is a firm that a few friends and I got together and put together, I guess, like about 8 years ago now, that does seed stage investing. It's kind of, there's actually, I think there's at this point several firms that kind of have a similar history that look like this, but when we did, it was a little bit more unique, which is initially it had just basically been a few friends. We put together some cash into a common vehicle. A lot of us were doing our own angel investing anyway, and so we kind of like created a vehicle that we were investing out of, and it was pretty casual, a few $1,000,000. And then, after I left Facebook, Kevin Colleran, who's one of the other GPs, said, "Hey, let's make this a real firm," right? And so we raised a $65 million fund and a $145 million fund, and kind of have raised about $500 million to this point that we've deployed into early stage companies. We're hyper generalists, so we've done everything from brands like Casper and Allbirds we were seed investors in, to things like Robinhood and Slack and Postmates, like kind of tech core stuff. And then we've also done a ton of crypto. So I took a few $1 million and did a bunch of crypto investing out of the fund starting in like 2016, 17. It's become a major focus. So, we're hardcore generalists.
Why is it called Slow? That seems to be antithetical to most of the venture world.
I mean, look, there's a bunch of stories for this you can get into. I mean, one version of the story is there was a great restaurant called Slow Club we liked, in San Francisco. We also just like, the more high-minded version is we like to point out that, a lot of these things that are supposed to be overnight successes start out really slowly and take a long time to ramp. So we think about it that way. Right. I think there's another version which is like, candidly, it's just funny to name a venture fund Slow.
That's actually what I assumed it was.
Yeah, there's some level. I think that we joke that one of the core firm values, we did like a values exercise. One of the core firm values we came up with was the poo emoji. We think you can't take yourself too seriously. So we've always joked. We actually now have a growth fund, which isn't officially called Slow Growth, but we like the idea of having a fund called Slow Growth.
You should have named it that. Why did you not? What did you name it?
It's the Slow Growth Fund, so it's damn close, right? It's not quite actually named Slow Growth, but that's kind of the joke. Is
that's amazing.
You gotta have a little fun.
That's amazing. So what's for people listening who are entrepreneurs? What's the firm's pitch to founders? Like, why take your money?
Because we're good. No, I mean, I think our we don't like to pitch the way some other we're not your babysitters. Like some people we're gonna have you all these services for you, and we're gonna handhold you through the entrepreneurial journey. And candidly, having been entrepreneurs and built companies, We think that's all kind of bullshit. Like entrepreneurship's like super lonely. It's super hard. We'll never know your business as well as you will, right? But there are a few places where we think we can be uniquely helpful in moments. Like one, and we love being available on text messenger, right? So like our view is like text us when you need us. Like we're not on your board. We don't want to like get up in your business. We want to be super collaborative. But there's places where we can be helpful either from a product perspective. We've seen a lot of companies. We've built a lot of companies actually. Like people have questions about how do I recruit this role or like what do I do strategically here? Like we're really good at texting. And then I think a little more formally, a lot of our LPs, not all of them, but like several of our significant LPs are kind of like the best Series A investors in the world. And the reality is there's only one thing that kills seed companies, which is running out of money. And so I think we've gotten pretty darn good at when we work with companies, helping them identify quickly, not all the things they have to build, right? Because you have to build tons of things to make a company successful, but what's going to matter and be answer changing for the next Series A, for the Series A fundraising. What do you really have to hit that? And then making sure that we're actually socializing the companies and helping them talk to not just anyone or the name, but the right people that they should be talking to about the next round. And I think we take that pretty seriously. Like as a partnership, we basically do rolling calls with every major Series A investor in Silicon Valley every few weeks to kind of understand our portfolio, talk about what's next, talk about what they're looking for and what metrics look like so we can really guide people through that very critical period. If that makes sense.
That makes tons of sense. You're at an interesting place because you're kind of at the nexus of a lot of different dimensions of the tech ecosystem. VC via slow, you're out of Facebook, you're an entrepreneur, and I know you for a long time now, and I know you to be a very big abstract thinker. I would love to hear your perspective on the current state of venture capital and how you see it evolving.
Yeah, it's interesting. So I just wrote, the other thing I like to do a lot is write. And, I just wrote, my wife founded a publication called Misinformation, which is a subscription only publication, covers the tech industry super deeply, and I think super well. And I wrote a kind of long essay. It's probably the thing that ended up going most viral I've written recently about kind of what I was talking about, like the end of software VC. And comparing a little bit to earlier cycles where, venture capital, it's kind of like a thing that comes episodically in new industries. If you think about it, like no industry should remain depending on venture capital forever. Because if you think about it, venture capital is literally the most expensive money in the world, right? Like, it's available to early stage companies, but the price is really high, right? It's, and that's how venture capital is such a great financial business if you're good at it, right? Because you're basically selling the most expensive commodity money in the world. Now, so what happens is you start out, you have a new business idea, a new thesis, maybe it's SaaS or cloud or like whatever area you want to talk about. Crypto, certainly, is, I think, going through this. And initially everyone's like, well, these are really interesting ideas, but this shit's crazy. Like, I don't want to invest in this. So you call people like me and I'm like, wow, that's actually awesome. Here's some very expensive money. Let's go explore it. But once those models get figured out, everyone's like, oh yeah, I know how to value this. I know what the metrics are. We all want to play in it. Then over time, industries grow out of VC. And I think that's kind of happening in software right now, where like the reason you see all these huge mega funds coming in and, the leveraged buyout asset managers getting into doing, growth rounds is like, everyone kind of understands the model. They know how good the businesses are, and the money gets priced accordingly. So all of a sudden, the super expensive venture capital money is just like money. Like you can get, you have a good software idea, you can get it from anywhere, right? So my view is that what's happening right now is ventures at a point where there's a bunch of stuff that used to be software venture capital of Silicon Valley, which is really not venture capital anymore, right? And then the real venture capitalists, some people will say, great, that's awesome. I made a shitload of money as a VC. Now I'm going to be an asset manager. And that's fine. I'll just raise 100 times more money and, play against the East Coast firms. I think the real people who like VC, like me, we just go find wilder new shit to back, right? And like, that's kind of what I think we're in the cycle of right now. I mean, crypto has been for sure, and I'm a big long-term bull, but like, we've done unbelievably well backing early stage protocols from 4 years ago. We were, seed investors in Solana, which is, a 3,000x return for us right now, right? So like that was in an era when no one was doing that. That's kind of become more mainstream. It's no longer as good a business. We're still looking for new opportunities in crypto, but then even going into other stuff that people won't back yet. So I kind of get excited about, talk about the future of VC. I personally am looking for things generally which no one else wants to fund, right? And I think that VC in general will be pushed away from the software stuff that it's grown up on or been defined by the last 20 years.
Do you think that will apply to the super early stage or just growth? I wonder that some of the firms you're talking about, and I agree, they're crowding in. I've never seen a convergence of private equity and venture capital in the same industry until the last 3, 4, 5 years. But the private equity guys, I don't know if they understand how to invest in companies pre-cash flow, pre-operating metrics.
I think so. I said in that article, and I stand by the fact that I think seed is relatively more protected than Series A on beyond. Like once you're at an A, like it's just a numbers game at this point, right? Even though there's a lot of company building left to do. I think seed is relatively protected, but here's what's happening: is it's kind of like everyone's main course is someone else's appetizer, right? And so what's happening in some ways is there's a lot of companies that are coming in and saying, "Oh, that's cute. I can write." It used to be like, "Oh, well, like I'm a growth investor, but whatever. I'll write A checks. Like, who cares? I don't care if I make money on it or not. But like, it's just a way to like get action." And now you have a bunch of Series A firms saying, "Oh, well, we'll write seed checks. Why not? Like, who cares? It's just marketing for us, right?" Candidly, we do this. Like, we do angel checks at up to $250,000, and like, we're not trying to actually make our fund on that, right? Like, that's kind of like to be in the industry and be supportive and helpful. But so because of that dynamic, I think seed is impacted, although less, is what I would say.
What other sectors are you interested that you think are kind of outside the domain of more traditional capital sources? You mentioned crypto. Are you looking at space? What else is out there for you?
No, I mean, we have done some space stuff. We were seed investors. I put a check into Astra, which just went public through a SPAC and like was a space company. So we will do stuff like that. It's a little wilder. I mean, you're going to laugh at this because you've heard me pitch this 20 years ago, but I think there's a few wilder opportunities we're looking at. Some of them are kind of in the crypto space broadly, but aren't mainstream yet. And like the world of DAOs and things like that I'm pretty excited about. And the other space, again, you'll laugh at, is we started directly backing humans. So investing in people rather than companies. We're doing this in the creator space. We're doing this with entrepreneurs. We backed some great entrepreneurs, not for a company. We're just like, look, we'll buy 5% of whatever you do for the next 30 years, right? And how
does that work structurally? Can you explain that?
So there's two different structures we've created. One's kind of more entrepreneurial focused. The other is kind of more creator oriented. The entrepreneurial one's like you basically just boot a C corp, right? And then you kind of sign an agreement that says, look, anything you do will be owned by the C corp, right? And you're the biggest shareholder in it, and we're minority investors in it. And I think this has some huge advantages, actually, for some entrepreneurs, especially ones who are going to be prolific over the long term, because it allows them, in theory, to do things like skip their seed rounds, right, and own more of their businesses. Like all of a sudden, if you have a holdco that we've helped finance, where you can churn out companies effectively, almost like an incubator, but you don't have to do seed financing anymore. Then you get to own more of your companies, skip right to A's, right? Because you can go longer, right, on your own balance sheet. And I think that's a very successful strategy that is going to emerge. And well, by the way, anyone who's listening, if you're doing this, give us a call. And then on the creator side, I'm a big believer, historically the way a brand was built is you start a product, pet rock, whatever, I don't care what it is. It gets really big. People are like, oh my God, that's a great brand. We love this brand, does this awesome stuff for us. And the brand's like, cool, now I can do more stuff. Like Amazon's a good example. Like grow up as a bookseller, you earn the right to do more and more products, but the brand comes after a product. With all these platforms, Instagram, YouTube, whatever, what you're seeing is all these creators start incredible brands with huge loyalty and no products, and then layer products in later, right? And the thing is, these guys are all completely cash flow bound pretty much, right? And so we're very interested in financing creators broadly. We've done some investments in companies that do this, like Juice Creative, things like that. But we're also literally directly saying, like, we have a structure where we'll say, look, we boot an investment company that's like an LLC attached broadly to you, right? We built legal docs around this, and we basically say, look, we will just give you no strings attached, money, and we want a small slice, right, of whatever you produce over the next period, equity, cash flow, etc. So it's early, but we've now done this, and we're doing this a few times, and like we're going to do more of it, and we're building a fund around that as well.
What's the largest check you've written into a person?
$1.5 million.
Got it. And you
But
said
I
you're about
think,
to go out and raise a fund for this to
well,
focus
again,
on
like
this?
we basically have like a fund running where we've kind of committed capital to this strategy, but it's not like it's kind of like our slow growth fund, right? Well, actually, that's
Right.
not quite fair because slow growth actually is at least technically a legal entity.
This- so this
Um,
is Slow People Fund? Is that
Basically,
the
I mean, it's called we're calling it a creator fund because we're not that good at naming. But yeah,
right?
so we're doing. I mean, I think there's a lot to do in that space broadly, and there's a bunch of reasons why. We did a bunch of ISA world investing. We really believe in effectively equity financing for people broadly, right? And I think there's a lot of slices at that are going to be very interesting. But I wouldn't, yeah, I think someday there'll probably be growth equity for people, right? In these types of brands. But like, this is the type of thing we talk about weirder stuff. Like that's the type of stuff I get interested in. That I'm not when we're doing these deals, we're not competing with some other fund because no one else is doing this. We're competing with like, is this a good deal that is awesome for everyone, right?
Now you're focusing on Slow these days, but I know you started a company recently. It's not that recent anymore. Do you want to give a quick overview of Fin?
Sure. So Fin's a great. I mean, so when I left Facebook, I was very conflicted about whether I wanted to be an operator or an investor, as I have always been, because the grass is always greener.
I share that.
When you're operating, you're like, God, this is fucking hard. Like investing is that can be broad, whatever. When you're investing, you're like, well, this is cool and really interesting ideas, but I don't really do anything, and like that has its own challenges. And so I kind of tried to have I did have my cake and eat it too. We started doing investing, with friends and building a fund, and then, I was I adore Andrew Cortina, who's one of the two co-founders of Venmo. I love Ikram as well. I had been their first investor and helped them find their first institutional capital and like in the early days of that. And so Cortina was also kind of finishing up his corporate gig, having sold Venmo, and we said we got to start something together. And so we started a company, Fin. Where we started with saying, look, we're really interested not in, at that time everyone was obsessed with like, oh my god, like AI is perfect, we're gonna have these AI assistants, blah blah blah, and we're like, we know this technology, this complete bullshit, right? But
Mm.
we are interested in how AI and machine learning can augment human processes. And so we ended up saying, well, it'd be cool to build is like like a Siri as a super Siri and just mix in humans, like see if we can figure out how to do that. And the idea was, well, we'll build all the technology from the ground up ourselves, nothing off the shelf, and let's just figure out the problem space. And we built a pretty cool assistant business. This has been tried a few times, really hard. But we did a pretty good job, and we got to be gross margin positive and growing and lots of loyal customers. But we, in the process of doing that, actually figured out what we found was an even better business, which is instrumenting knowledge work. So if you're working in a factory, everything is instrumented, right? If you are working in
What
front
do you
of
mean by instrumented?
I mean, understanding per task exactly how each person's completing something, right? What clicks are they doing? What are they focusing on? What knowledge
Mm.
based pages are they using? Like, what is their workflow in knowledge based situations to complete tasks? And then how do you optimize it? And so there's this whole world, as I'm sure you know, of like RPA and like all this type of stuff going on, robotic process information, how do you do it? But in the end of the day, I mean, I did start my career at Bain, and like until you have a clean big data set of like what's actually happening, it's super hard to know like what to automate, how, what's the payoff of it. And so we've built a pretty big, we built basically this instrumentation suite that we needed for ourselves. Like we had 100 people doing these tasks, and we're like, we don't know how to fix this or improve it because we don't know what they're doing. So we better figure that out. So it's a classic story. I actually am proud that I don't consider myself a real engineer, but I did actually build the first version of this plugin, right, myself in a hackathon because I really want to understand the workflow of some of the agents. And we realized it's an incredible business because you have huge companies. Airbnb is a big customer, people like that, they have huge knowledge work teams, right, doing customer service, things like that, and like you know having them understand what's actually happening so they can scientifically improve the process is a very important missing piece, right? And so,
To make sure I understand it now, so it's looking at what the knowledge workers are doing, creating essentially patterns around what the routines and work is, so that a third part, like management, can look at it and turn dials.
yeah, we can understand and understand exactly how to improve a process, where gaps are, but basically say like, look, I'm just gonna create a full data set, time and motion studies, every second of every day, what every single person on this 10,000 person team is doing per task. And then I'm going to start pulling insights of where I can optimize, where I can make a process better, which knowledge base pages are broken, when mistakes are made, why, right? Scientifically, and then continuously monitor and drive that. And so, long-winded was saying, this became a pretty good business, great business. We think it's going to be a huge company, but we kind of got to the point where, Cortina and I are like, I think pretty good 0 to 1 guys, but we're not necessarily the best 1 to 2 guys in the enterprise SaaS world you've ever seen. Like we're smart, but like we're not the best. And so we found the best, which was, Evan Kamak, who's the CEO of that, brought him in, have kind of set the company up for success. And, we're both still involved, but he's driving the ship.
Now, for people looking at these spaces, right, you picked one of the hardest roads to go doing the personal automation, the V1 of Fin, the assistant, the personalized assistant. That's really hard technology to build because there's a number of applications of building a real her
totally
are infinite.
Yep.
How much of it was manual in the beginning? And I ask this for the perspective of someone listening who's considering a kind of a machine learning or extremely complex technology as a venture. What is the right balance for manual versus automation when you get started to set yourself up for success and proper trial and error?
So what I'd say is when Cortina and I did this, we did this pretty eyes wide open, having both founded and sold companies successfully and kind of being in a financially secure place and being young and hungry and knowing what we were doing, right? And like the reason I mentioned that is like, don't start this type of a business, right? We did this
super hard. When I saw you were doing this, I was like, wow.
Well, we did that again, like not to like, we did that on purpose because we were like interested in the problem set area. And like, we're like, look, the only way to actually figure this out is to just like actually start doing it and put pedal to the metal. And like, we'll figure out, we know it's interesting. We know we'll figure out cool stuff. But like, again, like we also did everything custom. Like we built all our own software. And you're like, well, that's a dumb decision if you're a startup most of the time, except for that was kind of the point, right? The point was like, okay, like, can we think about this end to end and build the right infrastructure as part of it that puts us in a very different place? And so I think it's not a great way to be an entrepreneur. Like we were doing it having from a place of a lot of safety, and like wanting to take something on like that because we felt uniquely positioned to try. So the first answer I give is like, don't do that, right? Now, if you are going to do it,
right?
Having said that you shouldn't do it and knowing that you shouldn't listen to seed investors, you should do whatever you want, right? What I'd say is like, look, we started out like completely manual. Like literally we would play this like game where like, one of us would pretend to be asking questions and the other person would literally start out being like, how would I complete this? And like, what software would I want? And then how would I speed it up? And then, things like that. And I do think that that's basically the best approach to most automation is like, just you literally like play a game like where you with the kind of masked man behind the scene, the Wizard of Oz style, and then you figure out how to chip away at the problems. And we have invested in a lot of businesses. We would jokingly call them AAI or artificial intelligence businesses.
Love that.
Where
definitely
like
stealing that.
Yeah, AAI. Where like with AAI, we've invested in things like like we've invested in some wealth management companies. We've invested in a lot of things that like fit this pattern because we think we understand it at this point, which is like, okay, like which of these businesses, none of which can be as broad as Fin was, but like are good places to build these types of like semi-automated, more efficient human in the loop services effectively versus things that are just like fool's errands.
Yeah, fascinating because there's a place for this in the world. Right, and especially good entrepreneurs who know how to chip away at the clay.
Yeah, the thing I'd say though is you also have to, I think, know yourself, which is I think, and this is one thing I think Cortina and I didn't like fully internalize when we started the Fin Assistant business is, there's an enormous difference between software and service entrepreneurs. They're both really valuable, and you can create a lot of value and build very good companies building services or software, but I think the leadership required for them is very different, right? And so there's certain, like, I think that's one thing that like we kind of came to. I wouldn't say the primary reason for the way we pivoted, but like a part of it for sure, which is like we kind of realized we're like deeply software people, right? And like services are just I find them brutal. That doesn't mean that like they're not important, and it doesn't mean that like you can't build great service businesses, but like from a personal emotional standpoint, I find services brutal in a way that I like software.
Right. You mean in terms of dealing with the humans, the employees and the customer.
And like the whole, and like, it's kind of like my wife's business. My wife founded the information, and it's a journalism business. Like they have to make their product every day, right? Like they can't take a
Right.
day off. Like there's no like,
Right.
there's
It's a
no like,
treadmill.
okay, well we solved that, now we're done. It's like, oh my God, like we delivered something, now we have to deliver it again tomorrow, right? And I just, like, it's who you are. Like I think you just have to know yourself a little bit. And like, I don't like delivering things every day. Like I like really delivering deeply sometimes and then like not delivering anything for a while.
Love that. So I'm glad you mentioned the information because ever since I've known you, back when you were at Dropio, the company you sold to Facebook, you had been obsessed with paywalls. That was a Sam Lessin special, always there.
Yeah, I do
And
like
lo and
paywalls.
behold, the wife has launched a very successful paywall media site. Can you tell
Yeah,
us a little bit about the information?
sure. So yeah, I mean, your point about obsession with paywalls. I mean, when Amazon first released like a payment platform APIs, the first thing I did was I built a company called Letterly. Remember Letterly back in the day?
Hmm. Hmm.
Which was basically Substack in 2008, right? Or nine,
Right.
whatever it was, where it was
You're
like,
ahead of your
look,
time.
you can, write a newsletter and put a price on it and we'll like, collect the subscription fees for you and, email this address and we'll distribute it to whoever subscribed, right? Very simple. Actually did really well in its time. Like that grew really quickly. So we're like, there's something here. But like I got distracted with other businesses and Facebook and things like that. So that kind of thing petered out, although it was cool to see Substack eventually come back around to it. Yeah, look, the information, I mean, my wife was a longtime Wall Street Journal reporter, had written a huge number of articles for the Wall Street Journal, she's a very hard worker, the tech industry, in an era. And, she's like, look, I think that this was in that period, people were really heavily biased towards like traffic and, just having a lot of page views and people using the internet that way. We can get into why that was. But she's like, look, I think journalism is valuable and like I am going to make a serious, push towards I will do high quality journalism and you will pay me for it. Like at the time that was shocking. Like I love, Business Insider when she launched literally wrote an article being like everyone's laughing at Jessica Lessin. And like it's one of those like, yeah, you
Huh.
can laugh, motherfuckers, right? Like, but we'll see who has the last laugh, as my wife
Right.
definitely is. You fast forward, I guess like 7-8 years since she founded it, and like, subscription media, at least in a lot of circles, went from being crazy to like the core of everyone's business. They were very ahead of their time in terms of doing that. The company's super successful. It grows really nicely. It's, they do quite a bit of revenue and have, a very large subscriber base in tech and finance. And, they're able to support dozens of full-time journalists covering this stuff. So everyone's always complaining about the death of journalism and da-da-da. It's like, maybe you just need like a better business model and to pay journalists to do really well and you get good journalism. Like it's not rocket science.
I think we're seeing that concept spread out more broadly, right? There's a lot of podcasts popping up now that are really focusing on quality and getting away from the ads. There's a political podcast I picked up called Breaking Point, where
Mm-hmm.
they try to argue both the left and the right perspective. That's useful unto itself, but they're trying to get away from the simplicity and narrow messaging of the mainstream media.
Yeah. Well, look, I think there's positives and negatives to that. To be clear, the reason I think ad-supported media is pretty dumb is because, look, I spent a long time at Facebook. You can look at Google, which is probably the most successful business model in the history of the world. It's like you will lose, right, to tech companies for ad dollars and reach, right? Like because TikTok is way more compelling than anything you're ever going to make, right? Like just straight up, right? And so like I don't, I think it's a fool's errand for most media brands to really be in the ads business. Though I do think that obviously some have pulled off niche audiences and they have good salespeople and they do okay. I think people are willing to pay for things they value to that point, right? And so like, why not charge them? Like align your incentives and like with your audience, I think is great because then you can produce what they want and what they need, not what's I do believe that whoever's paying you is kind of ultimately your real customer, right? And I think that
Right.
in terms of decision making, that's important. And then I'd say like, look, I think the knock on subscription businesses, which I think is true, is that they almost by definition will reflect what their customers care about and want, which might not be like always completely perfectly in the public interest, right? If that makes sense. And you're going to end up with smaller communities. Like, if 100 years ago, everyone read the same 3 newspapers and then eventually watched the same 2 television channels, had the same information, shared viewpoints, shared perspective. That's a pretty cool function for democracy. It has its own challenges, but at least everyone's on the same page and getting the same information. The second you get into subscription niches, the world will diverge. You're going to have more and more different takes on. I think that's generally very good and very healthy, but there are costs to that.
Yeah, I mean, let me just ask a broad question on this topic. Do you think the kind of news business model as a whole is broken from a civil responsibility perspective?
I don't know. I mean, if you look at the history of the news industry, going back hundreds of years, there's a great book called The Invention of News.
Mm-hmm.
And we have been through so many cycles at this point of private newsletters that are expensive, that cater or give real information to the people that need it, right? And like are willing to value it. And then eventually some technology comes out and someone goes for the mass play. And then that mass play gets super scammy and spammy because that's where they're getting paid. And like candidly, the scintillation is what people want. And then all the elites say, oh my God, this is crap. I need real information, and pull back into private newsletters and news sources that they pay a lot of money for. So like, this isn't a news cycle, right? And I think it will continue for a long time. And it's kind of a rational cycle. Now, the public interestness of news, I don't know. I mean, I think there's a bunch of democratic functions which like businesses are not very well set up to fundamentally support. And like for instance, I'm not a guy. I don't believe in double bottom lines or triple bottom lines or quadruple bottom lines. Like businesses make money, right? Like that's what they do. If you don't like the way they make money, then like the government needs to change the framework or the rules by which they make money, and like that's the government's job. And like ideally you have good people who are making the right decisions. Ideally, ESG aligns with the bottom line, but like being like, well, businesses, we need to overload that concept with more responsibilities, right? Because they're successful and good and like they need to do more things, I think is like a very wrong approach personally. So when you get into the civic responsibility of the news, I think it's a tough place, right? Like, I'm not sure, I don't, I'm glad that journalists, and I think people should feel like a sense of importance to obviously the truth and reality. And like, I think that's actually just good business. Like, I think if you publish a bunch of lies or untruths, at some point people are just not going to pay you anymore, unless they're really scintillating and it's just entertainment, in which case they might, but like they're not paying you as a news company anymore. They're paying you because it's comical, right?
Right, but that's been confusing to folks.
I know. I think that's actually I think that's the real problem, is that historically, if you think about it, you were a newspaper, you're so profitable that and there was nothing else to look at. There's nothing else interesting going on. Like you were stuck at home reading a newspaper. There's no fucking TV or radio or people to hang out with or social media. So you kind of had this weird monopoly status where like you basically could shove news down people's throat, a lot of which they maybe didn't even want, but you were also their only entertainment source. So they kind of put up with it for the entertainment, if that made sense. Mm-hmm. And what happens is with technology is that it turns out there's like all these classes of businesses that are way more entertaining than the news, right? And so it's really hard, unless you're selling to a professional audience that values the truth, right, to ram news down people's throat, right? Because they're like, well, I'd rather just be entertained. Like TikTok is really entertaining, right? And so I don't know. I think these are kind of like natural business dynamics that are paying out, and like the historical model of like, everyone trusts the New York Times, which by the way, you shouldn't trust the New York Times. The New York Times is fine, right? Like, but they definitely have their viewpoints. They definitely come with an agenda, sure, yeah. Right? They're pretty naked about that. Like, I think those I think it's just like a quaint bygone era.
I mean, you've been looking at and studying the kind of the communication space, one form or another, for a really long time. Then you landed at Facebook. I mean, it's obviously a major topic of our day. Who can or should be responsible for preventing the spread of misinformation on social media? How do we deal with that? Well,
look, I can only give you obviously my very limited opinion. I haven't worked at Facebook in a long time now. But look, here's the deal. There's a great like Simpsons like old man yells at the wind type or whatever. Like here's the reality is, in the end of the day, it's like we've lived for a long time in a physical space that we really understood the rules of, right? Like we understood how information flowed and we understood how to interact with each other. And candidly, there was a nice iterated game to it where like, if you lie to your neighbor a bunch and they're your neighbor, like there's real cost if they don't trust you anymore, right? And there's like, and things like, if you think about that. We also lived in a world where like, you don't think there was misinformation floating around the world like 100 years ago? It was rampant, right? The problem was it was in back rooms, in living rooms, in conversation spaces we had no ability to measure or understand, right? So what's happened with the internet, and I think what's happening very real time, is a few things. One is like the stakes around communication, especially with light forms of identity, right, have been really shifted dramatically because you're no longer interacting with the 10 people that you're going to interact with your whole life. You're interacting with 8 billion voices, right? Most of whom you have no idea who they are or who to trust or what's going on, right? And so I think that's a really cognitively dissonant thing for society to deal with. And then, beyond that, when you think about the measurability of this stuff, all of these terrible things, misinformation, hate speech, all this terrible stuff that has been going on forever, all of a sudden is laid bare, right? You're like, oh my God, we can measure this now? This is terrible. So it's kind of like, it's like all of a sudden when you add that measurability and that insight, you're like, oh my God, like, wow, there's a lot of bad stuff in the world. And I think that's like a real shock moment for people. So there's like a fundamental technological set of problems. And then there's like a realization that's happened with the digitization of content that I think is really scary for people. I'll be honest, my fear, this is like an adolescence, like we're in an adolescent phase of the internet. The thing that I think we would really screw up for the long term is actually bad and over-regulation and control of speech, not under-regulation of control of speech. And the reason is you see a bunch of bad stuff, you're like, oh my God, this is terrible. Like, what tools do we have to stop this heinous stuff, right? That we was maybe there all along, but now you see, and you're like, you want to have that reaction. But the problem is like, look, technology is super powerful. Like, historically, you might ban a type of speech from a public square, but you'd never stop it. Like, speech is free, speech is open, right? Like, people can always say things in back rooms. And I think that's an incredibly important escape valve for scary authoritarian governments, right? And really bad stuff. Like, I think it's very important that we have the freedom to say whatever we want, wherever. The technology actually threatens that for the first time in a pretty unfathomable way, right? Like, there's an old Russian joke, which is like, oh, in Russia, it's not that we don't have free speech, we just might not have freedom after speech, right? Which is kind of a joke about that. That was true. I mean, like, you could never pre-regulate, really. You could only regulate. Now, all of a sudden, but you penalize. That's fine. Like, I can say, okay, I'm going to say something, and I know I'm going to be penalized, but at least I can say it. I can get the ideas out. This idea that in the digital space, I can set to perfect censorship, public, private, whatever, is completely terrifying, right? And like, I think actually one of the most existential threats to humanity in the midterm. It's an abstract one, and people are bad. They're very bad at trading short-term real realities for midterm existential threats. We're just terrible at it. It's the same reason we can't control global warming, right? Is we're absolutely awful at this. But I do worry that, you talk about regulating speech on the internet, who should do it, the risks that we use arguments about speech we don't like, even extreme stuff like, child porn is the perfect example. Everyone hates child porn. And so you say child porn, I was like, I have no response. I can't argue pro child porn. No one would do that. But like, using that as having with Apple right now as a way to pry into visibility, access, and ultimately control of human speech is utterly terrifying. And I think anything we can do to push back against that is very important in the midterm to long-term society.
We just had someone on the show who is basically an expert on U.S.-Chinese relations. And we talked a lot about the Chinese model. And I think beyond the economic competition, the prospect of potential war, all these awful things that might be coming, there's a very interesting sociological dynamic right now where we have two case studies developing in parallel. We've got America, which has values-free speech on the internet, but there is no single source of truth.
Yep.
And friends and family members think the world is completely upside down from what I think.
Yep.
And then in China, there is a single source of truth as a government, but there's no opportunity to deviate from it. So it's this, which one's going to hold is very interesting.
And here's the problem. The problem we do face globally in society is the Chinese model is definitely more efficient and very successful in the short run. It's way less resilient to cataclysmic outcomes, right? Like, you can't get rid of dictators you talk about that version. That's very scary. And it's also not clear that in the long run, it's actually a better model, right? Because the reality is you cut off all this creativity and discovery and innovation that might be super important. So it destroys a lot of resilience and a lot of creativity that I think is like pretty critical for humanity's long-term stuff. But the problem is just like any authoritarian, or like authoritarian is even harsh. Any dictatorial, centrally driven system, it is more efficient in the short run, right? And so I think that's like the really big challenge. Is my big argument is this. Here's another thing about it. China's China. The U.S. has a choice. The U.S. can choose to effectively go in the direction of being, I'll call it China light, right? Or it can go in the direction of being like, no, we'll be the free world, right? And like, so the question is, which should the U.S. do? Like, Europe, I'd argue, is going towards the China light version, right? I think that if you think about successful competitive strategy for the future, being like a shittier version of China, because we'll never be able to do what they do, right? But being like a shittier version of them is a terrible strategy. Like, what you want to do in our position, even forget like anything else competitively, is stake out the opposite end of the spectrum and wait for the wheel of history to turn in your favor.
Right, because they have a single point of failure, right, in the government.
Yeah, right. Which again, like, spending a lot of time. What? Single points of failure. It's just like a database, like versus a distributed crypto system. It's like it's incredibly efficient until it's not.
Until it breaks.
Yeah.
Right. Well, let's talk about decentralization. Where we're on the topics. Over the last 50 years or so, this technology has enabled decentralization of a whole bunch of institutions that people never thought would be broken up. Internet, Bitcoin, all these things have kind of broken things apart. What are the institutions that are still centralized that you think will be broken apart in the future?
Well, interestingly, I think the cycles of centralization and decentralization are constant. And I'd also say, keep in mind, like, what technology does, I don't think it's quite so simple to say it's just decentralize a lot of stuff. What I'd say is, like, there's a lot of stuff, the technology always makes the middle drop out, right? When you get more efficient and clear about things. So what's really happened is a barbelling effect, where you have hyper centralization and hyper decentralization, but things that were kind of centralized go away, right? Is what I would say. They get replaced by one of the two extremes. So yeah, the internet has actually probably centralized human speech, right? Information, whatever, unfathomably, right? You think about even like we were talking about news before. It's like, how many newspapers there used to be, how many newspapers are there now, right? Like,
right.
like, or how many people open up Google every day when they have a quiet. Like, there's massive centralization, right? On one hand, Facebook and communication. Like, what percentage of human communication is now on a single platform versus it's massive, right? And at the same time, to your point, there's a whole bunch of functions and institutions that used to be semi-centralized or much more centralized that are getting, blown into decentralized bits across the ether. And I think there's a lot of competition between these two poles. So, when you say what's centralized and gets decentralized, I don't have like a ready-made great answer for that. But I actually think that like a lot of things that are centralized will get decentralized. And you know what? Interestingly, I think a lot of things that are decentralized will get centralized, right? And like, we're just going to go through
what comes to mind when you say that?
That's what's going to get centralized?
Yeah.
Well, I think, for instance, let's talk really big picture. It's like, what's going to happen to nation states? Like, we have a weird number of nation states right now, right? Like, that is a kind of a semi-centralized system, right? You would expect that with the internet, right, we're either going to go towards, the crazy tech visions of self-sovereignty and like, digital citizenship and, not even digital citizenship, but like, I belong to some tribe I just invented and it doesn't matter where I'm located. Like, that's one version, which would be the decentralized future, and like crypto people like that. And the other version is actually like, look, you're going to end up with like two spheres, like a Chinese sphere and an American sphere. And like, that's about it, right? And like a lot of other national borders just become completely irrelevant, right?
And that's been the pattern throughout history. As technology, information, and transportation have become easier, you've just seen consolidation. I mean, there used to be 15 Italian states, and now there's one.
Well, I think even the United
European
States.
Union.
I think even the United States, like there are the 50 states we have, completely irrational, right? Like, made tons of sense when it took a day to travel across, New Hampshire. Makes no sense, right, to have the number of states we have at this point, right? And it's causing a lot of problems, right? Because the reality is, like, take like local taxes, in a frictionless world, a bunch of my colleagues now are Texans, right? Or, and like, I think that like that we have an unstable number of states. Now, the problem is our system is so deeply entrenched, right? That it's kind of hard to imagine it, but it's funny, this federal government used to regulate interstate commerce, which actually wasn't that much commerce. now everything's interstate commerce. So like, there's a really interesting set of questions about what centralizes or decentralizes. But we really shouldn't have 50 states. Let's be clear.
So I want to take a left turn here. I know your dad was a big figure. I know he passed away a handful of years ago. He was a legend on the Wall Street side of the world, and then had his own venture fund.
Yep.
Before he passed, he wrote a book. Do you mind telling us quickly about the book, Lessons?
Yes. Look, my dad was, I love my dad. He's an amazing guy. He was a visionary for sure. And obviously a very hard worker as well. And had as you said, an amazing career on Wall Street. And then really, as he used to say, there was a period where he was the largest East Coast angel investor, which he used to say is like kind of like being like saying you're the smartest utilities executive. But but the look, he had actually several medical incidents throughout his life that were pretty serious. Like he almost died in his 30s, he almost died in his 40s. He then did die in his 50s, but I think he was always very aware of his mortality, and that kind of led to two things. One is, I think he always looked at it. He says, once you've lived through one really serious near death thing, you kind of change. It does really fundamentally change your perspective on how you want to spend your time and like what you value. And I think it's one of those things that all blessings are curses and all curses are blessings. I think it really helped him live a very good life, and a life where he got to prioritize what he cared about in the time he did have. And the second is he was very obsessed with, in I think a healthy way, like reflecting and leaving notes for his kids, if that makes sense. And one of those took the form of this book that he wrote, ostensibly for his children, but he also gave it to a lot of other people, called Lessons, which was kind of like his 99 points on life. And it's a good read, actually. It's a short read, but it's a good read. It has a lot of good lessons in it.
So you were kind enough to give me a copy of the book way back when, and I was looking for it before we chatted today. If I remember correctly, there was a story about what time he used to show up at the office when he first started his job.
Yeah.
Do you remember that?
No, I can remember this. He would go to the office insanely early. He would be there literally at 4:30, at latest 5 in the morning. He'd go from our house in New Jersey over the bridge in. I think there's a few factors in that. One is, I hate bridge traffic too, right? Like, if the idea of commuting when everyone else is commuting and just spending an hour in traffic versus 15 minutes speeding down the West Side Highway, or 20 minutes if you're being efficient about it, is, there's a night and day difference there. I for a while was commuting from San Francisco to New York, and I got to say, from San Francisco to Facebook, and I did the same thing. I wasn't quite 4:30, but there was me and one other guy in the building from 6:30 to 9:30 every morning.
Right.
And so that was one piece. And the other thing is like, I think he said in the book, which is true, is like, it's pretty easy to look smart when you had a 3-hour advantage on everyone else in the office.
Right. And that's a big insight. It's funny. That seemed like maybe just an anecdote, but it felt like the first time I had seen someone really successful saying something that I had kind of operated with throughout my whole life.
Yeah.
It also came up in, I believe it was in Tony Hsieh's book, Delivering Happiness.
Yeah.
The idea of figuring out a 5-star experience and then brainstorming your way to a 6-star and then a 7-star. This idea of just really absolutely overdoing it to make sure you win.
Yep.
And that is a concept that I was just talking to an intern about a week or two ago, giving them some career advice. And I'm like, just depends on what you want to do. But if you want to win, there's the 5-star, there's a 7-star, there's a 9:30 arrival, and then there's a 3:30 a.m. arrival.
Yeah.
You can control outcomes. It was very inspiring for me, validating for me to hear your dad through his book describe that.
I think that there's a lot of lessons in there, and I think that's a good one. I definitely, I remember even when I was doing an internship in college, there was a nothing internship. No one cared. I was always there, before the crack of dawn, before anything opened, and I'd have to sit in Starbucks and wait for the office to open because I literally couldn't get into the building because I very much internalized the be first in the office, right? And that meant. Now here's the flip side to that, which I've learned in my own life, and I think my dad suffered from in some ways, which is you gotta pick your battles then, because there's always a cost, right? Like if you're gonna be in the office at 4:30 in the morning, you're gonna be out early. You just can't. It is impossible to work until midnight, right? And so you have to like refactor, your life around that. If you want to deliver a 7-star experience at certain things, other things will slip. And so I think actually the other important lesson for any intern or person coming up is like, actually, I think one of the most important things is, yes, work very hard, but almost more important is be really careful about the battles you pick, and then be okay releasing everything else, right? And like releasing things that don't fit, because you literally, I mean, the idea that you can consistently outwork everyone on everything all the time, you will kill yourself, right? You have to pick what matters. And I think a lot of people work really hard, but they pick the wrong battles, is the other way to think about it.
Sam, it was terrific having you on. Brilliant as always. Thanks for the insight.
Good to see you, as always.
It was awesome to have Sam on today. I think I'm always smarter after I talk to him. If you like what you heard, please hook us up with a like or a 5-star review, and feel free to share with a friend. You can find me on Twitter at MPD. To hear more of my conversations with innovators, subscribe on YouTube, Facebook, or any major podcast platform. Just search for Innovation with Mark Peter Davis.